And it's why in low volatility environments, you don't have to do iron condors that might lose money. You can do something like this.
Okay. So let's go back to the original trade, the core
Right.
of the position, and that's the 10 lot. Remember that 10 lot we bought? It's right here. So we paid $475. Now, keep in mind, I'm going to jump back for a second. When you go back here, that's the 10 lot we bought at $475.
Right.
So it's showing your P&L open loss of $1,100 because it's now 3.5. Okay, keep that in mind. Now, why is it we're not looking at that number? Well, because we didn't buy it alone, Kev.
Right.
We sold the 100 call with a much shorter date, right? Remember, these are Octobers, right? So they expire on the 21 October.
Remember,
we sold the June 17th.
our goal was to do a after Labor Day long call, selling summer short call.
Right.
Right? That was our game plan.
So we bought the fall, October, and we sold June. Now, we collected 50 cents. So what you said, Kev, earlier is that, this 475 call really isn't 475. It's 425.
Exactly.
Well, that's true. It is 425, even though it's going to show you back when you go back here that no, it was 475. Well, because that's true. You
That
did
was
pay
that
that for that
original
option.
trade.
But the original trade also sold a call for 50 cents. Right? Now, what happened to the call that we sold? It's, again, the 17th of June. Well, here it is. We bought it back for 3 cents. So basically, we didn't make 50 cents, Kev. We made 47.
47. But we figured that in because,
Right.
and that's not the way I did it, Scott. Because look what we did right after that, the next line up.
Okay, so the next trade, this is the 6-9 right here.
No, the other way. Right? Yeah, the other way. We
Oh,
sold
not that one. That was different, yeah.
We rolled it for net 78 cents.
Mhm.
So we took in that half a dollar. Right? Our net was 425. Right?
Okay, take a look. So, yeah. So we sold this call for 50 cents, bought it back for 3. So that's plus 47. So you can just say, okay, we made plus 47.
Right.
Then, Kev, on the same day, look, same time, look right here, same time, same day, we went out and sold the 99 call for 81 cents. Okay, so there, we just collected 81 cents
So
again.
that net transaction, of course, and this is without commissions,
Mhm.
we're down to 347 in terms of our net cost.
Original 475 call.
Because we did the
still have it.
425, right?
Got it down to 425.
And then we took another 78 cents off net. We bought in for 3 cents, and sold out for 78 cents.
Oh, I see. Okay. Sold for 81.
Well, you know what? Hold on. Let's do it. Let's see. 425 minus 47.
Yeah, let's do that.
Right. Okay.
Because we
I'm
collected
with you.
50 and we paid 3. So 475 minus 47.
It's 378.
Okay, so now we're down to 378. Now, we sold another call. This one goes out to July 1st, and we collected 81 cents. 81 cents. I'll keep it highlighted.
Mm-hmm.
Then what did we do? Well, go out to the 24th, and you can see we bought that one back, that same July 1 call, for 5 cents, Kev. So there you go. That's another
76 cents.
76 cents. So add.
So now we're down to $3. I lied when I said 304. It was 302.
Okay. There. So
Down to
302.
302.
Now that was this one.
Right.
And what else did we do when we bought it back for 5 cents?
No
Nope.
commissions.
No, yeah. Well, we did. That was good. But we also sold this, the 98 call.
For 49 cents.
49 cents. So let's go back to that one. So far, the other two we sold. One for 50 cents. We bought back for 3. The other one we sold for 81. We bought those back for 5. Now we're selling another one. And this is the July 15 call for 49 cents, Kev.
Right. Now 49 cents lowers our cost basis to $2.53.
Now, did we keep the entire 49 cents?
No, because we had to roll it
Okay.
for even money to 71 cents. Remember, we did a diagonal for even money. So we really got no benefit from that because we had to cover it there. Right?
Right here, yes.
Yeah, the fact that all we did was extend for the same amount of money that it was trading. So we extended that. So really, nothing came from the next trade. We
Yeah.
did it for net 0.
Got it.
But however, then we made another 56 cents because we covered those this morning for 15 cents.
And those would be
The ones we just sold
99
for
that we
71
sold.
cents. Right.
Right.
So we made no
Brought it
money
back.
on that next roll because we rolled it for even, right? But then we covered that for 15 cents, so we made another 56 cents.
Got it.
Okay?
Now, what were these trades, these 99 and a half foot? Those or post-closing sale. Okay, that was something different. Okay,
Right.
that had nothing.
Those had
were
nothing to
puts.
do with this.
Those are puts.
That was something, yeah.
something different. These are all puts right here.
Right.
Okay, so now we're going. So we're going again from the 15 call we sold here at 49. That's the 98 call. We bought it back for 71, but at the same time we sold another one for 71.
Right, so that was even. We made no money
Well,
on that roll.
Yeah, but if we sold this for 49
Hold on though.
and we bought it back for 71, we have to take small loss on that one, right?
I don't think so because you haven't done it yet. You extended duration, you actually didn't do anything. You see what I'm saying?
Well,
By math calculation, all you did was extend duration for no money. The profits come in the next trade when you bought that one back for 15 cents. Right, it's 49 cents minus the 15, so you made 34 cents on that one.
34 cents.
That's where I get it, right?
Got it.
You extended the duration and then you covered that 49
Got it.
cents for 15.
For 15, that makes sense, right?
Right. So that was 34 cents,
Yeah.
which gets us down to $2.19.
$2.19.
Net debit
Got
is
it.
what we paid.
So essentially, this $4.75 call, with all the other
It's down to
calls we've been
2.19.
selling, is down to 219. But when we go to the activity and positions, it still counted as 475.
Right.
It still counts as 475, not 217. So it marks. It says you paid 475 and it's worth 350. Really, we paid 219 and it's worth 350.
Chaz, you're exactly right. We covered it this morning, mid-morning for 15 cents when it dipped below the strike. By the way, now it's right at the strike.
Mhm.
And it's trading 14 cents. So we covered it a little early. It actually went a little lower, but now it's trading right at 15 cents because the stock's rallied a little bit.
Yeah, let's take a look. So here's the options expiring today. Here's the 99 call.
Yeah.
And it's trading.
We
yeah,
covered a
13
little early,
cents
but
right
I thought it was a nice chance to buy it.
Yeah.
If the market
No, it's fine.
recovered.
Oh, we don't
Remember,
mind.
we had about $1 loser on this at one time.
Yeah, this was 2 days ago worth $1.35.
Right.
And we were thinking, oh, we're going to take a small loss on this one. And of course, getting it back to 15 cents today is great. And then you can see we've gone out and sold something 7 days from now. 7 days from now. And we collected about $1.55. Right? So about where that is. Now,
Chaz is saying, so that's a cost, not a credit. No, I disagree.
which one?
This last little sequence. We sold for 49 cents, right? Rolled again for even money, and then covered for 15 cents. So we made 34 cents on that whole. Now it did cost us commissions, right? 100%. But we didn't have any trading losses. We rolled for even, and then covered for 15 cents.
Right. Exactly. And if you wanted to say, well, listen, if I want to be an accountant and just stay with each one that we sold, you could take the 49 cents and say, okay, I bought it back for 71 and say, okay, so you lost 21 cents, 22 cents. But then you could say, on this 99, you made back 60, 61, 50, 40, 58 cents, right? Well, you add those together, you still get the 34 cents. So depending on how you do it. But the interesting thing is now, this call we just sold today is $1.55. $1.55. We just bought in another $1.55 credit. Now, Kev, we haven't taken that off the price of our long call yet.
Right.
That $1.55 is now sitting here, and here's our long call.
So right now, we're long the
100
October
call.
par for $2.19,
That's really $2.19. That's the real true value of this one.
and short
And
the
then,
July par calls at 155.
right.
So we've got this net calendar spread on for 64 cents right now.
There you go. So you have a calendar spread on basically. For,
And it's trading $2.
yeah.
Right, 157 and 355.
And it is
we've got
calendar,
it on
it's
for
the same
64
strike.
cents.
And they're the same strike. Okay. So that is.
And we've
calendar.
got, going into earnings week, we've got, I believe that's $100 a day in theta in Apple.
Let's take a look. Yep, right there. Theta, about $100 a day.
$100 a day.
So,
How we do it?
so far so good. So
Yeah.
again, when you look at these
But
numbers,
what I'm
don't
saying
get
is,
confused.
and I understand, it's kind of hard to follow this, right? It's a little difficult, but it's showing you, even if we're off by a couple pennies,
It doesn't
right? Even if
matter.
our math is wrong, the big picture is there, that this works. Using the theta, using the rolls, extending duration, it works.
And having the stock kind of hang around 100 doesn't hurt us either, right? Let's go ahead and take a look at this particular position. on the analyze tab. Can we do that? See, there's Apple, and we'll hide simulation. And let's see if we can put this one in. I don't know if it's going to
And SD says July